Okay, everybody, welcome to the Forex Trading with Orderflow. My name is Michael Valtos. I'm the founder and trader at Orderflows.com. First, a brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. Only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Okay, Forex or futures trading. Now, that's a big question for a lot of new traders. They see a lot of Forex brokers out there offering very low commissions, very low margins. There's a big difference between the Forex market and the futures market. Futures market pricing is more transparent. Pricing, when I say pricing, what I mean is the bid and the offers. With the Forex, you tend to have white label, banks white label Forex computers. But, the same concepts apply to the Forex markets that apply to the futures markets. They're supply and demand driven. Economics, fundamentals, technical analysis, it all applies. It's an auction market. People are buying and people are selling based on their analysis, based on their interpretation of future events. Now, you're going to look for the same thing. You're going to look for price acceptance. You'll look for price rejection. And opportunities are going to arise at unfair prices. So, people that know me, are familiar with me, know I'm a futures guy. They know I'm an order flows person. And the problem is when you're applying order flow to a Forex chart, it looks very different. Forex is priced different. Futures trade in contracts. One contract, for example, in the euro currency is, well, now it's, I think, 62,500. It used to be $125,000 per contract, but they cut it in half recently. But when you're trading Forex, right, you're trading it in, lot sizes, anywhere between, $10,000, upwards to, $1 million. Really, it depends. So when you're going to look at a Forex footprint chart, order flow chart, this is what it's going to look like. You're going to get a lot of zeros. Now, people could say, well, yeah, you could just, cut off with the zeros, because you're going to basically base it on $100,000 would essentially be one contract. Yeah, you could do that. There's other ways you could look at it, but honestly, it's a bit intimidating, a bit overwhelming. Because it's a lot of numbers. People are scared of numbers. That's just the reality of it. Even if you're just looking at a regular futures chart, with order flow and watching the volume, yeah, it's also kind of intimidating to a lot of people when they first look at it because there's a lot of numbers. So, my goal was to create an order flow based indicators that will run on normal bar charts. And the result I've come up with is the price rejector. You could visit the website www.pricerejector.com. Before I proceed, let me just explain. It runs on the NinjaTrader trading platform. It doesn't run on MT4. It runs on NinjaTrader. Now, NinjaTrader, they also have a brokerage division, NinjaTrader Brokerage. You can check out their website. It's ninjatrader.com/forex. The trading platform is free to download. If you want to get a paid version, that you want to run your trades through their system, then when you open an account with them, you'll get a discount, and you also get better pricing as far as commissions. So I'll say it's win-win, but it's to your benefit to open an account. And honestly, I've got an account with NinjaTrader Brokerage, and it's fine. I'm a low maintenance guy. I don't want to have any issues with my broker, and the only time I really had to, I didn't even have to speak to anybody, to take out money. I just fill out the form and submit it. And I've never had a major issue. The only issues I've had was when my connection goes down, my internet connection goes down for whatever reason. But, once it comes back up, the system's running fine again. And I said, I don't want to have any problems, trading. And I've never had any problems whatsoever with NinjaTrader Brokerage. So, I'm not want to sound like a pimp for them, but, it's, I said, I'm a low maintenance person. I don't want to have to deal with people, because usually when I'm dealing with people, then it means that, there's a problem. So, check them out. You can also use their software. If you don't use their broker, I think you can use it through FXCM as well. So, FXCM is also a big, solid Forex broker. So, check them out. Check out NinjaTrader. You can start there. Again, it's a perfectly good brokerage company to deal with. So, getting back to the price rejector, what do you have? This is how the chart looks. This is a 1 minute Euro USD chart. And, it's giving you support levels in the market, in real time as they're happening. So, okay, this one, it failed. It didn't hold. Here, it kind of popped up, held a little bit. Here was a nice move. Here was a nice move down. Now, what the price rejector is, it's trying to find areas where price is being rejected. Down here, initially price looked like it was being rejected. Market started to go up one sideways. This one, it failed right away. But it's fine, because you got, you could have very tight stops and very limited risk and, decent rewards. So, again, I often say, are you willing to risk this? This is what, 2 ticks here, a couple ticks here, to catch nice moves like this or this. I mean, it's up to you. I mean, you got to decide how you're going to trade. Here's one, it sort of came down a little bit, did go through, but you got to decide, what kind of stop you're going to use. You're going to use 1 tick stop. You're going to use 2 tick stops. You're going to use 3 tick stops. This is a 5 minute USD Japanese yen chart. So again, it was a decent move up. Here's a Euro USD chart. These are all just the last couple of days. This is June, what was that? June 14. It's 14.6. This one is also the 14th. This is also the 14th. So you can see, it's looking for an area. The price rejector it looks for areas, lows or highs where price is being rejected. Now, it doesn't necessarily mean that this is a line in the sand. As soon as you break it, that it's all over, end of the world, end of the trade. No, sometimes, the market, especially in the FX, you often get little pushes through it by 1 or 2 ticks. That, I think, is due to a lot of the arbitrage that's going on in the Forex market and the futures market. There's a lot of I started my career on the CME floor in the currency quadrant there. I traded Swiss francs, I traded Deutschmarks, and the first few rows of the pit, going around the pit, it's all dealers, people trading FX market against the futures market. They're doing that arb. So sometimes, it's not uncommon to get, just a little probe through by 1 or 2 ticks. Because, obviously people are trading the futures and they're trading the Forex against each other. Okay, this was the 15th, so it's just yesterday. A nice one. It's giving you a nice sell signal here up at 112.27. A nice little move down. This is a 5 minute chart. This is 2:05 in the morning Chicago time. So it's nice moves. Okay, so this is another chart. This is today. This is right now. Right now it's 5 in the morning Chicago time on the 16th. Okay, this is a 1 minute Euro USD chart. Just so you don't think I'm just pulling charts out my butt, looking for the best charts. And I'm going to look. Europe opens around 1 a.m. Chicago time, and so we're going to start it. This is 1 a.m. This is the Asian session here. This wasn't any signals, I don't think, during the Asian session. Asian session is pretty quiet. Obviously, in Europe, there's a lot more activity. So let's go ahead. Let's take a look here how it unfolded. Okay, so just after the European Open, you got to sell here. It popped up through here. It was at 85. Here it's a little easier to see. So the high here is 85. It popped up to 87. Okay, so again, it popped up by a couple ticks. Are you going to use a 1 tick stop? Probably not. You probably use 2 or 3. If you're using 2, yeah, okay, it would have stopped you out before making its move lower. I think a 2 tick stop is extremely tight in the Forex market. But again, it's up to you. Okay, here's one. Here's a buy. Now this is at 2 in the morning. Starts to work out. Turns around. Starts coming down. Okay, this one clearly is a loser. It stopped you out. But you have to have stops in there. I'm not saying don't have stops. Even if you're using 2 tick stops, okay, so you lost, what was that, 84 up to 87, 3 ticks. Here, say using the same 3 ticks, okay, down 6 ticks, then boom, you get a nice trade here from 67, up to where you get another signal up here, so what is that, 76, okay, so, in one trade you got back your 2 losses, and you're short here now, again, somewhere around the 75 level. And what do? We trade down, yeah, we came back up here. I don't think I would have gotten out. You're just sort of going sideways here now, so, if you're short in here, trading 66, it's in your favor, still in your favor, trading down to 50s, 50s, and, that's where we are right now. So, times it's just after 5 in the morning here in Chicago. So I mean, again, people will see it, they'll get this indicator. I mean, I don't put out many indicators at all. I put out the Orderflows Trader software, I put out the Delta Scalper, and I put this one out, the Price Rejector. The Price Rejector, I think, works for Forex better than the Delta Scalper. Delta Scalper is more of a futures indicator, not necessarily Forex, because it deals with the delta, with the rate of change between the buyers and the sellers. But the price rejectors, it reads the order flow, and it's very effective on the futures market as well as the Forex market. It works on both. But a lot of people come to me and say, "Hey, I'm a Forex trader. What can I use to trade Forex? I want to use order flow in my trading, but I can't. They don't want to look at this. They don't want to look at this chart like this right here. Because it's too difficult with Forex. With futures, it's very easy, but with Forex, it's a bit different. You want to have a nice clean chart, just giving you a sell signal or, a buy signal. I mean, that's what you're looking for. That's why I created the price rejector, so that, people can have cleaner charts. I hate messy charts. I see people, using all sorts of indicators on their charts. They got all sorts of lines here. Oh yeah, you buy here, but in order to buy there, it's got to break this line. You got to have this going. The planet Mars and Venus and Jupiter have to be aligned. It's just a headache. It's just a mess. So, if you want to add order flow to your Forex trading, look at the price rejector. It's affordable. Again, you're trading money, right? And you want to have something that's going to give you an edge over other people. People that are using indicators, MACD, RSI. Honestly, those things have been tested and proven to fail. But the price rejector is based on order flow, right? This is an order flow indicator, so it's reading in how the market is trading rather than printing a certain a number and okay, well, did we cross the 0 line or not? It reads the trading that's going on in the market. One of the reasons why a lot of traders fail is they think every price is the same, in that sense that if we trade say 112 even, they're going to trade that print the same as if we traded 111.95 when it's completely different. There's volume involved. There's buyers and sellers involved. Whether you could trade $100,000 worth at 111.95, you could trade 10 million at 112 even. Well, which is more important? You have to take that stuff into account, right? The volume. That's where a lot of the indicators that are developed, over the last 30, 40 years, that's where they fail, because they just take into account the price, but not all prices are the same. If all prices were the same, then, there'd be no auction. The market price wouldn't necessarily move up and down. You wouldn't be able to go to the car dealer because you and bargain, because, that's the price. I mean, that's what an auction market is. It's like going to the car dealer and bargaining over the price of the car that you want to pay. You want to pay a certain price. He wants to sell it to you at a certain price. So you guys are going to go back and forth. So that just proves that, every price is not the same, just in real life, just as in trading. But anyway, I digress. Really the whole point is, if you're looking for an order flow indicator that you can use with Forex, take a look at this, and I think you'll be pleasantly surprised at your results. So, thank you. So to learn more about the trading software used in this presentation and how you can profit from order flow trading without necessarily having to have an order flows chart, you can either visit my website, my main website, orderflows.com, or for this particular indicator, it's www.pricerejector.com. So thanks for watching this, and I hope to hear from you. Bye-bye.